I just look at you.
Yep. Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from AWS reInvent in Las Vegas, Nevada. Joining me to kick off day 2 of Trade Talks coverage, we have Rajay Rai. He is the Chief Information Officer at Trust Bank, and we're here to discuss a paradigm shift in digital banking technology. Rajay, it's great to have you with us. Welcome to Trade Talks.
Thank you, thank you.
So, Trust Bank, you took 12% market share in your first year of operation, becoming one of the world's fastest growing digital banks. How did you achieve that rate of growth in a market as developed and as competitive as Singapore?
Yeah, great question. Actually, let me start by saying, something about Trust. So Trust is sponsored by Standard Chartered, which is about 60% stake. 40 is NTUC, which is a large ecosystem in Singapore. They have about 1 million customers interacting with them every day. And that ecosystem, banking is something that has really enabled us to grow because we are plugged into their ecosystem. We're integrated with their ecosystem that enables us to reduce the cost of acquisition. And when you look at Asia at the moment, it's quite exciting actually, because you'll find that the companies such as Kakao, right, was launched in Korea, and we bank in China. You'll see that the ecosystem banks at the moment are flourishing, and it's an exciting time to be there.
Let's talk about the digital banking scene in Asia, Southeast Asia in particular. It's very vibrant right now. What's driving that, and how is cloud helping to transform the digital banking landscape?
So when you look at what's happening in Asia at the moment, the West started giving out these licenses a while ago. Even in Europe, you'll see that happen many years ago. Whereas in Asia, you're seeing this starting to emerge a few years ago where, like for example in Singapore, there were 5 licenses issued. There were 2 on wholesale, 2 on the digital side, and then there's 1 that was us that was granted. And the government is also investing a lot in the national infrastructure. A good example would be the infrastructure that they've set up for digital identity. That's flourishing. That enables banks to actually onboard customers really fast. And with that, you also have, credit bureau data that's available. So the decision making has been accelerated, and that enables us to have this, seamless onboarding experiences for customers, so reducing their cost of acquisition. But more to that, I think you will see that especially in Singapore, you will see that digital banks have been able to challenge the traditional banks with the new features, hyper-personalization, and the cloud kind of lowers the barrier of entry into creating innovation, because now you have all these new patterns available, technology available at a lower cost, and that's driving a lot of change in the market.
Let's talk about the technology some more. Running on cloud and running on AWS, right? It's allowing it to become more scalable. Tell us about the technology behind that.
Yes, so at the moment, I'll just take a step back and tell you what's the shift that's going on, right? So if you see, maybe 5-10 years ago, it would have been harder for banks to launch a bank like us, for example. But now you have lots of partners and vendors who are available who are also cloud native, right? So what that means is, a good example would be the core bank, right? So if you went back a few years ago and wanted to get a core banking system, a digital bank would have to create that themselves because there weren't many in the market. But now you have core banking available. There are many of them available who are digitally native, right? So they're built on the cloud, and that lowers the barrier of entry. So unlike having large, monolith applications, mainframes, now you have lighter weight technologies supporting core banking. And with that, I think the cloud is enabling companies like us move faster by moving the line of innovation closer to the edge. So companies like us can actually differentiate by creating better user experiences for our customers.
How do you think this technology is going to continue to be disruptive and then also enable banking for the unbanked or underserved communities?
Yeah. So firstly, lowering the cost of acquisition with technology, also reducing the operational cost of running a bank would enable us to pass on that service, better service to our customers, right? So it's not costing you more to service our customers. So that's number one. Number two is you will find that there are more and more services available. So it is less complex for banks like us to integrate into an ecosystem and also create a composable business. So we are composable. So we are using a lot of partners, SaaS platforms that enables us to move fast and frictionlessly. And in spaces of unbanked world, I see a lot of innovation coming and people getting access to features and banking services that was traditionally harder to access. So I see a lot of change happening there due to technology. It's all happening due to all these cloud providers making it easier for banks like us to access technology.
Right, and of course when you start providing that bank to underserved communities, then you start growing the local economy.
Yes, absolutely.
And that's one of the biggest benefits of it. All right, Rajay, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from reInvent. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.